G'day, I'm Peter Bender from Bundaberg Commercial, and I help people to buy and sell commercial properties and businesses. And this week, one of the questions that I find hard to answer is in regards to how much will it actually cost to make this purchase? Because there are a lot of fees and charges associated. So this week, we're going to talk about closing costs. In America, they call them as closing costs. Similarly, in Europe as well. In Australia, we might call them contract costs or purchase costs. But it's all the extra little bits and pieces that add up to make your purchase price just that little bit more than what you expect. There are three types of closing costs that I'll have a look at. One is government charges, the other is professional charges, and the third one will be bank fees. And there's subcategories in each of those, but they're the three types of charges that if you're looking to buy or even sell, that you need to have factored into your budget. All right, let's tackle the big ugly one first. Now, governments around the world find it very hard to make budget. So, what they do, as soon as they see someone with money, they want to get some. Even though they don't deserve it and they're not going to do anything for it, they just feel it's equitable to share what you've got around. And that's the category that I look at with government charges. And the first one that they have is what's called stamp duty or transfer duty. It essentially is their processing fee for changing ownership of commercial property or businesses. Now, it's on a sliding scale. So, what I'm talking about here is the pricing for Queensland. So, different states have the same charges and fees, they may have different rates. And quite often, depending on what's happening with migration, they may change the pricing of stamp duties. So, always check with your lawyer. Or even just go on the web page and check state government stamp duty fees to find out what they're looking for. Now, in Queensland, it's a sliding scale. If you're buying a commercial property for $500,000, you're looking at about $16,000. So that's a fair price to look at. And the sliding scale, it actually gets higher the higher the price, which is even harsher, I think. So for $1 million, you're looking at $38,000 for stamp duty or transfer duty. And anything over $1 million is $38,000 plus $5.75 for every $100. So it gets to the stage where you need to have an accountant to work out how much it costs. But it's generally the biggest cost that you have when you are purchasing a commercial property. All right, what else do we have in government charges? All right, the federal government also likes to make sure it gets a slice. So it talks in terms of GST. GST currently is 10% in Australia. For overseas viewers, you're looking at value added tax, that sort of type, commodity type tax that you're looking involved with. Now, the good thing with buying a commercial property is GST is not always applicable. If you have what's called a going concern, you will find that you probably don't need to pay GST. Going concern is if you're buying a commercial property that has a lease involved, or if you're buying a motel that has a lease between the lease owner and the lessor. So that sort of type aspect is something to have a look at. And probably the only sort of happy point when you're looking at buying commercial property, whilst there's a lot of fees available or operable, you actually get to claim a lot of these back in your tax return. I'm not sure about the government fees, but some of the other ones do. Whereas if you're buying a house, nada. You ain't getting none of that back. So, every cloud sort of has a silver lining. If I'm not convincing you that it's okay to pay with these fees, then that's all right. That's the best I can do. It's just life. We just got to count it as the cost of doing business. The next category we have are what I would call professional fees. Now, your lawyer is firstly the most obvious one. Now, they will call them legal fees or conveyancing fees, which again has me confused because I used to think you convey something is when you carry something. So I'm not sure what they're actually carrying, but that's what they call property settlements. So conveyancing fees is the main one. Now, this is when they do their due diligence and leases and council searches and property searches and road transport searches. Now, you will find that some lawyers will have a fixed fee, others will have an hourly fee. Now, The thing to watch, and I've learned seeing this the hard way with some of my clients, is be a little bit cautious of legal firms who ask you for a retainer. So they may say, okay, well, it's going to cost X amount of dollars, so you need to put 10 grand on the table and we'll call you when we need some more. There's a saying, a retainer fee is like blood in the water for a shark. You never seem to get your money back or change out of a retainer fee. So go with either a fixed fee or an hourly rate so you can keep track of what's going on. I had one client who tried to change lawyers midstream. That tends to be very expensive. Essentially, the lawyer was very slow and getting very expensive, and the buyer just wasn't having any part of it. So they then went self-representing, which is okay, but it also tends to be a little bit dangerous because you really need to know what you're doing in that space. So it's one of those unfortunate, involuntary, unchangeable obstacles that you've got to work through, your legal fees. Other legal fees that you've got is you'll have your real estate agent. Now, if you're a buyer, you may have buyer's agents, and a buyer's agent fee roughly in Australia now is about 3.3%, including GST, of the purchase price. For a seller's fee, it's a whole different market. You're looking anywhere between 4.4% to up to 15%. I was quite surprised to see some of my competitors coming in at the 15% mark. It's like all things in life. When the economy is booming and there's lots of money sloshing around, some of these fees can get quite high. Whereas if the economy is slowing down, there's not a lot of buyers, there's not a lot of sellers, it's difficult to get work, you'll find that the fees will come down. Other times it is, a little bit of the case of you get what you pay for. Some of the cheaper agencies, you'll do your own advertising, you'll do your own inspections, you'll do almost do your own legal work. So it's worthwhile to shop around, is what I'm saying. So that's the professional fees for realtors. Now, in regards to what I didn't mention, is most of the closing costs are borne by the buyer. In America, it's almost the opposite way. The seller pretty well pays for all the closing costs. So that's an interesting concept. It's probably more a style thing. They'd probably incorporate that a little bit in the sale price, but that's the way that it works over there. Whereas in Australia, it's very much the buyer pays for everything. Sellers don't really put much up in front, but it sometimes is areas that you can negotiate with. Now, in professional fees, you've also got to allow for your accountant. If you're buying a property, you may have to set up legal structures, trusts, proprietary limited, all those sort of type legal structures. They may have to look at financials for you. You may want to have some advice beforehand in regards to planning and financing, exit strategies, and they all tend to be hourly rates, and they can be anywhere for most accountants between 125 to 250 an hour. How many hours really depends how many questions you've got. The setup of legal structures, look, last time I checked that was about $1,500 to set up a proprietary limited, and I'm sorry, I got no idea how much it costs to set up a trust account. What you should weigh up, however, in regards to accountants, is these structures are designed to minimise tax, which is fine. I've got no concerns with that, especially as I've just had my tax return done for the year, and I'm sort of sitting there scratching my head, how much am I paying in tax? So if you're looking at minimising, you may want to have a structure, but also recognise you're going to have other costs like compliance costs. You're going to have a fair bit of extra work that you've got to do to put in extra returns. So these are things that you need to factor in as well. So just make sure you are actually going to have more money at the end of the day after you've set up your legal structures and your compliance and those sort of type of materials, because you're going to have reviews. Quite often with property trusts, you've got to have appraisals or evaluations done, sometimes every year, and they can be, a significant cost as well. And it may just get to the stage where it's borderline. So have a look at that from a finance point of view. The other thing to factor in is also talk with your lawyer about your legal structure, because there are legal reasons for having different types of structures. Proprietary limited is treated differently for the owners as a sole trader is, as a trust is. So make sure you've got your head in that space and understanding what it is and why you're going down that line. It's a fair bit of work. It gets technical, but it is important for you to understand so you know which way to progress. The final category of charges is, well, I call them bank fees, but that may be a little bit harsh, but it comes generally from the bank and finance. So the good news is, if you're not getting finance, you probably don't need a lot of these fees. So that's a good thing, bit of good news for you. So the first thing with bank fees, you're going to have things like mortgage registration fees and loan application fees and all these little startup costs. I remember for a business of mine, not one of mine, but one of my clients, was going to go and talk to a bank, and they wanted $5,000 on the table before they talked to them, because they find that they spend a lot of time giving advice but not getting the business at the end of it, probably because they weren't competitive. But that was one way that they looked at it. So you may find that you have to front up some money at the beginning to get your bank fees started up. With all the fees we're talking about, some will need to be done before your sale, such as legal structures and your accountant fees. Some will be done, most of them will be done at settlement. So your government fees, like your bank transfer fees, your stamp duty fees, your professional fees to your realtor, they tend to be done at settlement time. And then some are actually done after settlement time as well. I can't quite remember which ones are in that one, but there's a few minor ones. Council sometimes gets involved in there, so you need to have that factor as well. So with the bank fees, you've also got valuation fees. So a bank, if is going to need to have a security over your commercial property, they will send out a professional valuer, and they are generally about $3,000 to get that organised, and the bank will charge you for that one. So what I would suggest is, if it's your money, it may be a bit uncomfortable with the bank, but make sure you get a copy. It's a good, important document, and you want to know how the valuer has come up with the property, because one day you probably want to sell it, and it's also good as an education for you to understand the things they look at and how to run with. If the bank gives you a hard time about not giving you your fee, go talk to your lawyer about freedom of information, and you'll generally find you will get it if you ask for it, and it is a very good key document for you. In regards to other bank fees, all right, building and pest inspections, look at for around about the $500 to $1,000 for that. Now they'll have a look at termite damage, wood rot, structural features of the building. They're actually one of the people that I find are imperative. I recommend all my buyers and even my sellers to get a building and pest inspection done before they list, to know what states you've got, where the skeletons in the cupboard are, and how much it will cost to do any repairs if you need to. Because quite often you do a building and pest inspection, find something, and you can either get the buyer or the seller to pay for it, or say guttering for argument's sake, or you can negotiate to take a little bit off the purchase price. So building and pest is an important one. Now in Queensland, I also use my building and pest people to do the asbestos inspections and asbestos reports. Whilst it's legal or a legal requirement from the state government to have an asbestos register on any commercial workplace, I'm still stunned at how many businesses do not have one. And I explain to my clients when I list their properties, they need to get one organised, because when it comes to contract time, you need to sign off that you have one. Yeah, Pete, no worries, we'll get that done. Oh, I hear that all the time. And then, here we are into contract time, building and pest inspection, and, well, we haven't got an asbestos report, and they need to sign off on that. So the building and pest people will actually do the registers, do the reports, tell you what it is, give you the treatment, the stickers, and help you in that category. The good news for a buyer is building and pest is paid for by you, but don't be shy to get any asbestos work or any asbestos inspections and registers. Levy that off to the seller. So building and pest, the asbestos section, you look around about $3,000 is a price that you have a look at in there. That's probably it for the building actually, and the bank fees. So there's a fair few categories that you're looking at For a buyer all up, you could look at around about 75 grand for $1 million property. So, these are charges you need to be aware of. For a seller, depending on how you've organized things and structured things, for $1 million property, you could be looking at $110,000, $115,000. So this really reiterates one of my ironclad rules for clients. Make sure you don't go buying to the maximum of your finance or to the maximum of your cash level, because these closure costs are significant. And if you have $1 million to play with and you go out and buy something for $1 million, you're still going to have to find 75,000 to $115,000 extra, and that can be quite a rude awakening for people who aren't prepared. But the good news is you've watched my video. You know that you've got government fees, you've got professional fees, and you've got bank fees. So with that, you can prepare and get ready to put on a big tax return with a lot of expenses. All right, if you've got any other questions on fees, please put them in the comment section below, and I'll be happy to sort of tackle them on another video if you need to. And if you haven't already done so, please smash that subscribe button. It's really interesting that 95% of people who watch videos aren't subscribers, but if you hit the subscribe button, you'll get more of my videos that come up, and it helps me to send this information to other people who may be interested. All right, have a good week and take care, and God bless.